Tom, are you on board with that?
Well, I think the big breakthrough this quarter was supply, not demand. Demand has never been a problem for Nvidia. The key was supply. They had been capped at $4 billion per quarter of revenue growth since Q2 of 2024. Even last quarter contracted. It was down to two quarterly revenue growth. Now you saw a huge jump of 10 billion revenue growth in the quarter. And what did Jensen attribute it to? New U.S. wafer production is running and partners are ready to build. So what does that tell you, Brian? It tells you that the U.S. facilities for Taiwan Semiconductor are humming and partners are ready to build. What does that tell you about Intel? Even including today's pre-market gains, Nvidia is up 43% year to date, but Intel is up 85% year to date. That is the dark horse. This is the key. Providing the supply for Nvidia is exciting to see, because they were really capacity constrained from Taiwan Semiconductor for so many quarters, which is why their growth rate was declining. This is certainly a big breakthrough. Somehow capacity and supply has come on, and it's come on in the United States. Big deal for Nvidia.
Jim, is it AI trade back on? If you liked Palantir but didn't want to get involved, now that it's well below the 52-week high, do you use this Nvidia report to get in?
Not for me. Listen, Nvidia is up, 3, 4, 5%. It's back to the level it was 10 days ago. I wouldn't chase it. I would say, in terms of the general market, this is par for the course. The last time we were on, we said, look, in years you get these 15% plus drawdowns mid-year. We got 20% in April. And then you reach all-time highs. The secondary correction averages over the last 50 years 6.5%. Well, guess what? That's effectively what we had intraday. You can get some relief in the general indices. Do you chase AI? Do you chase Palantir still at 125 times sales? Not for us. Not to say it won't work as a trading vehicle, but price is what you pay, value is what you get. We like a higher margin of safety.
Jim,
I don't know if it's a bellwether on the outlook for tech, but I will say their execution is crushing it. A lot of people see Walmart earnings and they say, oh, wealthier people are shopping at Walmart. The economy must be bad. I wouldn't make that assumption. I think they're executing a lot better from a technology standpoint. If you look at their e-commerce business was up double digits, 27%. So the wealthier customer goes to their website, they get great delivery, they get great access. I think Target, by contrast, the execution has been very poor, and it's reflected in their numbers. Their traffic is down. Lowe's and Home Depot, same thing, a contrast to what we're seeing in Walmart. So they are executing the store revamps. They're nicer stores, the e-commerce growth, everything that they're bringing to the table. It doesn't necessarily mean that the economy is bad. It just means that they're doing a better job at reaching out to all demographics. Both the poor demographics have done okay. The SNAP hit them a little bit, but now those payments are coming back at the low end. And the upper end, they're appealing to them in ways that they want to shop, with nicer stores, with better e-commerce, and employing that technology that you reference.
Yeah, I have no problem going to Walmart. By all means,
right now.
Tom, Macy's is a growth stock. You like it?
Yeah, well, this was a case of it's so bad it's good. This was a Left for Dead real estate play that activists had been circling around for years, trying to get them to just close the stores and sell off the real estate. So there was always a downside protection if it was liquidated. Now they've actually got someone in there who can execute. You had same store sales growth last quarter of up about 1%, some store revamps, some store closings, some better execution. Obviously, they have the higher end Bloomingdale's, which that consumer has generally held up. So yes, it's up a lot off the lows, but we're basically back to the future. I mean, this is below levels it was years ago. I wouldn't bet the ranch on this one.
Jim, what is amazing to me is that we've been talking about Walmart all morning long. You like into the holiday season?
I like, it's interesting. The Bank of America Fund Manager Survey had consumer discretionary stocks. Managers cut them by the most on record. I think there's a lot of opportunity in the discretionary stocks. I would maybe one step removed. I like the turnaround story in VF Corp with Bracken Darrell. That's Timberland, North Face, and Vans. Vans has been the drag. It's starting to show signs of positivity. We don't own Nike, but I think Nike is a turnaround play you could start to pay attention to in the the consumer discretionary place, and some of the restaurant stocks. So I wouldn't bet against the consumer. We do like consumer discretionary here because it's been hit so hard. As far as straight up retail, we're going to take a pass on that.
Yeah, I like Bracken as well. He's done some good work there to refocus the company, sell off some assets. All right, then Jerome Powell in the Federal Reserve.
Well, it's interesting. Today, for sure, this is a huge theme. And as Jim pointed out, the weighting in the S&P is so large for the S&P to go back up. This theme has to work. But if we look at the Fed, the odds of a rate cut in December, they've actually jumped from 30 to 42% in the last day, which is surprising to me. So that doesn't hurt either. Part of that probably related to the jobs report, et cetera, the unemployment rate ticking up. But as it relates to today and probably the next few days, if we get follow through in the AI trade, we're going to get follow through in the indices for sure.
Brooke, weigh in.